Welcome back, everybody. If you've invested in tech stocks, especially ones like Nvidia or Meta, or basically anything related to quantum computing, it's been a pretty tough start in the market for 2025. But what is going on and what does it mean for the rest of the year? Also, speaking of Nvidia, the comments and articles about its demise keep coming out, and more than ever, people are talking about AMD as a better alternative. And lastly, I have some books that I want to give away, and I'm going to let you know what complete invasion of privacy you'll need to do in order to get them. Now, I'm kidding, but let's go ahead and get started. Now, let's start off with what is actually going on in markets. Now, originally I had this whole part of the video planned out where I was going to go through the Fear and Greed Index, this Wall Street Journal article, talking about expected earnings and how big tech relates to any of that. And then I saw Joseph Carlson's video about basically the same stuff, talking about most of the same things. And you guys know that I don't really like to rehash things that other people have already done in videos, especially if I feel like I'm not really adding anything new to it. But I will say this, the Fed's decision to slow down their rate cuts because of the economic data that's coming out is something that's obviously going to impact the market, especially stocks that carry a lot of debt or ones that tend to be more high growth, high valuation in nature. And here's the thing, we've already been talking about this on this channel for quite a while, specifically as it relates to big tech, because here's what I said in early December. But not only do the big tech companies have earnings growth that's really outpacing a lot of the market, they're also the companies that, in my opinion, are most likely to survive a recession if the economy starts to go the other way. And I think this is one of the dangers that we're not talking about enough anymore, because now everyone's like, oh, growth is back and all these things are going up. But the way that I look at it is the market is at an all-time high. Inflation numbers are probably worse in reality when it comes to what we actually experience than what we're hearing in the headlines. And you see things like consumer debt is now at an all-time high. Those are things that usually, in my opinion, wouldn't really end well, or means that we're going to hit a little turbulence in the economy, maybe more so than people are projecting right now. Now, obviously, if there is a recession, then every company is going to be impacted on some level. But I do think a lot of these big tech companies are going to be more insulated from it than maybe the broader market. But believe it or not, I talked about this exact scenario with rates way back in August of last year. Now, I think the prevailing wisdom is that, well, a rate cut should be good for stocks. But I have a slightly different view, because at the end of the day, it's still going to matter how these companies are actually earning as opposed to just rates being lower. But still, we know that rates do have some impact, and we've talked about this before. But I still think the question is around what's the actual end result of this going to be, and that's where I have a slightly different view than maybe other people do. Because I do think there's a chance that the labor market pain may be prolonged, and that the economy is likely a little worse than we may expect. I also think that interest rates are more likely to stay at close to current levels than to retest anything like it was before, like below 1%. So for me personally, I think higher for longer is going to be a thing, even if we start cutting rates soon, because I just can't see us going back to the rate levels that we had before, where it was like 0 to 1%. So while they may cut 1 to 2%, that is definitely significant. It's just not like the previous period where basically any money that you had was going into stocks. So even back then, I thought that the amount and frequency of the rate cuts that they would do would be a little bit less than what they were saying and expecting at the time. And this is part of the reason why I don't base my strategy really in macro factors, because they're too hard to predict, and even if you guess right, there could be other company-specific factors that mess up your plan. So part of why I said that big tech are some of the best value plays in the market is because they're the companies that are most likely to report really strong earnings, even if the economy isn't quite as good as we may think it is. So if you're really focused on valuation and looking for cheap stocks, I would just say make sure that they're stocks that have a high probability of reporting strong earnings, because that will be more important than ever if rates remain higher for longer. And that's another reason why I said that buying any meaningful dips into these Mag 7 stocks, specifically the ones that are still growing double digits, is probably a pretty decent strategy to get good returns for 2025. Now, speaking of strong earnings, let's talk about Nvidia. Since January 6th, Nvidia is down over 12% in just 4 trading days. And the articles are coming out about glitchy AI chip racks and delays, and the comments about the big run-up is over, and you hold, but I sold. But the reality is that we've been here before, because the news site The Information, who published that article about Nvidia, also published similar articles in November and October and even August of last year. But even then, Seeking Alpha had an article yesterday saying that that news wasn't true, according to a source they have at Google. So yes, they're down a lot over the past week, but if you look at year-to-date performance, they're still just down 2.6% or so. And ultimately, for a stock that's up over 130% in the last year, what even is 2.6%, right? I mean, look, the reality with Nvidia is that there's a lot of people out there who want to see it fail and crash, either because they think it's a bubble or they think that AI is worthless. And at the end of the day, they didn't buy it and they're annoyed that it's gone up so much. Because one of the popular things that people used to say was that, well, Intel is going to get them because it's trading at such a great valuation. And at least up until now, we know that Intel isn't even in the same ballpark as Nvidia. But the common thing now is to say that AMD is the attractive investment because, well, it's at a, quote, better valuation than Nvidia is. But is it really? In a year when the S&P 500 was up over 20% and Nvidia was up over 130%, AMD was down 27%. Now, part of that is just because their valuation was sky high in January of last year, where they had a PE of 276 and a price to cash flow of 142. And now it's come down quite a bit to a PE of 103 and a price to cash flow of 89. But obviously, those are trailing metrics and the market is forward looking. So if we take a look on a projected basis, AMD has a price to earnings of 89 and a price to cash flow of 72. So it's even better, meaning that their growth is accelerating, which is a good thing. And you can see that in their projected PEG ratio of 0.8, which is very good actually. But here's the thing. While AMD's valuation is definitely better than it was a year ago, it's still pretty high, and it's not even more attractive than Nvidia's is right now. Because Nvidia is sitting at a projected price to earnings of 46 and a projected price to cash flow of 47, which is quite a bit better. Now, if we look at their projected PEG ratio, it's at 1.18, which is slightly worse than AMD's. So I think this is another case where people look at the stock price action and they say, well, AMD's down 27% on the year, while Nvidia's up over 130%, so AMD must be trading at a better valuation, but it's simply not. So obviously, depending on which metrics you use, it might be slightly different, but in general, Nvidia still looks more attractive. And you can see the growth estimates, at least projected over the next 2 fiscal years, still strongly favor Nvidia compared to AMD. But here's the other thing. AMD is about a $190 billion market cap company, while Nvidia is over $3.25 trillion. So for some people, it could simply be AMD still has room to grow, Nvidia's too big, they've gone up too much, and AMD's dipped, and that's why they think AMD's a better opportunity right now. And that's a perfectly fine and logical reason, but that's not the same thing as saying it's at a better valuation, because it's simply not. Now, my opinion on AMD versus Nvidia is a pretty simple one. I already own Nvidia, I think it's one of the best companies in the whole market, and my strategy is about market-beating returns, and I still think that Nvidia is going to be able to do that for quite a while. Now, is it going to be better than AMD? I have no idea. Is AMD going to start growing more rapidly as it takes over more of the inference market? I have no idea, and that's okay because my strategy isn't to determine whether AMD is going to outperform Nvidia. My strategy is to get market-beating returns, and for me, Nvidia is the much safer bet to be able to do that. And the reason I think that is because they're the market leader, and even with any hiccups in production, they still have the best product in the market, and their customers are going to keep spending money. They have Jensen Huang as their CEO, which is a big plus, and despite what you've heard, they're actually trading at a better valuation than AMD is. So this is just another great example of where having a strategy can really help you cut down through all the market noise, because while people are arguing whether AMD is going to outperform Nvidia in 2025, you can simply just say, okay, which one of these two companies best aligns with the criteria that I set out, and which one is going to allow me to reach my goals with the least risk possible. To me, that makes more sense. AMD may outperform Nvidia in 2025, but I still think that Nvidia is one of the best companies in the whole market, and their growth metrics still look strong. Okay, so let's talk about some free books. Now, I have 5 extra copies each of Peter Lynch's One Up on Wall Street and Annie Duke's Thinking in Bets, for a total of 10 books that I'll be giving away. Now, I've talked about both of these books on this channel before. They're 2 of my favorites out there, and they're great for anyone who's interested in picking individual stocks. But here's the trick. To be eligible for them, I need you to help me out with something. Because to put it lightly, my Instagram account sucks. I struggle to post consistently over there, and it's something that I wanted to improve for 2025. So I'm going to start posting some shorter, kind of less polished reels and stories just to talk about all the things that happened during the week. So if you want one of these free books, then just head over to my Instagram account. It's just Matt Darren, and I'll put that link down in the description as well. Make sure you're following me on there if you're not already, and check out the posts that I created for the books. And if you're interested in one, then just either comment on that post or send me a DM if you don't want to comment publicly, and let me know what you've learned or enjoyed the most about my videos or my channel overall. And I'll go through the messages and pick the 10 that I like the most, and it's not going to be very scientific, but I will go through each one. Now, in terms of timing, I'll keep the submissions open for about a week, so anything before January 23rd will count, and I'll let those who won know with an Instagram DM. So if you're interested, go ahead and follow me there and either comment or send me a note, and I'll get these 10 books out in the mail to the winners. If you have any questions, just let me know. So do you guys think that the market reaction in 2025 so far is a sign of things to come or nothing to worry about? Let me know down in the comments below. Now, if you missed my video about what I think big tech's going to do in 2025, you can watch that by clicking this video right here. Hope you guys have a great day out there. Financial independence is true freedom, so keep building and stacking wins, and I'll see you on the next one. Peace.